Hello. Good morning to everyone. Good morning to everyone. I think today is a very special day because I can see bright faces. You're all smiling. And I think the weather is equally good, right? It rained heavily last night and I slept like a baby. So, today is a very special day. And please, I would like to invite our colleagues. Hello to everyone. I would like to invite our colleagues. Hi, Rohit. Can you please invite our colleagues? Those who are snacking to join us, please. Over there, please. Yeah. Perfect. So I would like to start by, inviting our speakers. I'd like to invite Dupuy, who is a partner from Gaia Impact. Please come up. I would equally want to invite Daphne Pitt, advisor from GET.invest. Gwladys, CEO of QOTTO, BENIN. OLUSEYE, BASSIR, investment manager of All.1. And Nekesa, senior investment associate from Triple Jump. Perfect. Yeah, today we have a very interesting topic because we are talking about money. They say no money, no project. And of course, we understand that the continent is very unique because of low energy supply. And the continent has been hit the most by climate change. And this is because we have very low adaptive capacity to climate change. And because we highly rely on natural resources for survival and livelihood. And all these areas from agriculture to fishing and the forest has all been affected by climate change. So now we explore how do we incorporate energy systems to form like that very strong synergy that exists between energy, agriculture, energy transport, energy mining. And of course, there's no way we can extend our energy systems without funding. And we know that it is a very complex question for the continent, given that the continent is actually stuck with so many challenges, like access to healthcare, you can name a few. And sometimes it's very difficult to prioritize energy investment. So we have our speakers here who intervene, and they will tell us what they have been doing in the space to expand and unlock capital for energy investments in Africa. So I'll start by allowing them to introduce themselves, then we can get started. You have your microphone, please. Yeah.
Good morning, everyone. It's a pleasure to be part of this panel, and thank you for also joining and listening in. My name is Nekesa Simiyu. I'm here representing Triple Jump. I guess it's very much in line with the topic on trying to triple the renewable energy access on the continent. Just quickly, maybe on Triple Jump, we are an impact-focused investment manager, really operating across emerging markets. So we operate across Latin America, Africa, as well as Southeast Asia. The fund has predominantly really been managing microfinance institution mandates. But since 2019, we also ventured into direct investments, and we started with our Energy Entrepreneurs Growth Fund. We'll go into a bit more detail when we delve a bit into the topics. And then in 2022, we also started the CEI Africa mandate. So these two mandates really are what are relevant to this conversation, and we'll get into them after we finish the introductions. It's a pleasure to be here. Thank you.
Thank you so much. Yes, sir.
Merci beaucoup. Vous allez me permettre de partager les éléments avec vous en français. Donc, vous avez Gwladys ALAHASSA, ingénieure électrotechnicienne de formation, produit de l'école polytechnique d'Abomey-Calavi au Bénin. Je suis à QOTTO depuis 2018 et depuis 2023 la directrice pays de l'activité QOTTO Bénin. Et QOTTO Bénin, nous sommes en charge de faciliter l'accès aux services essentiels. Et pour nous, comme service essentiel, nous avons l'énergie par les kits solaires que nous mettons à disposition avec le pays Hazugo. Nous avons l'accès à l'Internet avec nos kits QOTTO Spot pour faciliter la connexion à l'Internet par la distribution du Wi-Fi connecté au système énergie. Et derrière la connaissance de nos clients, nous développons des produits additionnels, des services financiers tels que le nanocrédit adressé à cette cible, de la micro-assurance et d'ici là peut-être de la micro-santé. Donc aujourd'hui, QOTTO, c'est pratiquement plus de 20 000 clients répandus sur l'ensemble du territoire, avec un réseau de distribution, une équipe de plus de 600 personnes. Et nous sommes contents d'être parmi vous aujourd'hui. Merci beaucoup.
Merci beaucoup.
Thank you. I think it's still morning. Good morning, everyone. My name is OLUSEYE BASSIR. I represent OLON, and OLON is proud to be sponsors to the Energy Access Investment Forum, along with the other sponsors. So OLON is an energy impact fund set up by Shell with the mandate to improve new connections to electricity in Nigeria with a specific focus on the Niger Delta. So OLON is a flexible instrument that has just played a pivotal role in the emergence and the evolution of the sector.
Good morning, everyone. My name is Daphne Pitt. I'm here to represent the GET.invest and then especially the Finance Catalyst, or our Finance Advisory Access Services. Everyone has seen GET.invest here. We're present quite everywhere, I would say. But besides indeed helping organizations like our organize such great events as we're having here this week, we also have Finance Advisory Access Services, which we deliver through 2 services, Finance Readiness Support and the Finance Catalyst. Working with over 100 clients, having worked with over 100 financiers, I think everyone here on stage has or is currently working with us. And doing it with a lot of advisors. And before I pass on, I would like to shout out some of my colleagues that I see here in the room. We have Janos Bontas, Laumi. I don't think Caroline is here. She's currently present in the trainings, but also working with organizations like Mercy Corps, Green Max Capital, Innocent and Persistent. So I don't know if any of them are here in the room. Yes, it's good to see so many of you as well. So feel free to reach out to us and any of us, and happy to tell more later in this panel.
Hello, good morning, everyone. Also, good morning to all of you listening in from a distance. I'm Guilhem Dupuy. I'm with Gaia Impact. We are a venture capital fund specialized in renewable energy companies in Africa. So we are one of the few pure players doing equity investments in distributed renewable energy companies. We've been operating since 2017. We've invested in more than 15 companies, and we just raised a new investment fund back in August 2023. Doubling down on this initial energy access mandates that now makes us one of the few funds only doing equity investments in the field. So quite looking forward to discussing this topic and debating how to increase equity investments in the sector. Thank you.
Perfect. Thank you so much. We'll start with our interviews, and I would like to begin with Dupuy over there. We have been talking about the energy transition. And of course, if we want a transition that is fair and just, we need an inclusive and multi-stakeholder approach that actually incorporates every player, the private sector, public entities, research institutes, and startups. And you tell me that startups have a very big role to play. But the main issue is that they face so many challenges in transforming their clean tech innovations into what I would call demand-driven and investment-ready solutions. And sometimes it becomes very difficult to unlock growth capital. So according to your experience, how can startups unlock capital that can help them to transform these solutions into what I would call viable, maybe feasible, scalable, replicable, and investable projects?
But it's a very, obviously, complex question. I might try to perhaps draw from my experience investing in startups across Africa, and especially as an equity and early stage investor, you are confronted every day with this valley of death, because you are investing in very young companies, and then you are going to sit at their boards, you are going to help the entrepreneurs, help their teams to grow their company, to attract more capital, to formalize their ambitions and to attack new markets. And it takes a long time, especially in Africa, everything is challenging. So this valley of death, I don't think it's a secret to any of you in this room or anywhere else. This valley of death is very much real. And we've been confronted with that on numerous occasions. Obviously, I can only draw from my experience as an equity investment fund. I'm not looking at companies. I'm not looking at companies' characteristics the same way. For instance, debt providers are going to look at companies, or banks are going to look at companies. They are going to look at, okay, how to de-risk everything, how to making sure that I'm minimizing the risk, maximizing the upside. I'm not looking at things like that. Equity investors, they are not looking at things like that. When you're talking about growth capital, you have to assume you're taking risks. You have to assume the fact that you are in the same boat as the entrepreneurs that you are partnering with. And it's not that we are looking for very sophisticated things. We are looking for very simple things. For instance, it's a myth that VCs are looking for exceptional entrepreneurs. We are not looking for exceptional entrepreneurs. We are looking for exceptional teams. Because in this situation, especially in the energy access space, the sum of the parts is way more important than just individual skills sitting together and trying to push in all directions. So entrepreneurs are important, but the way they leverage problem solving, efficient teams with a willingness to work together to create more than just the individual sum of their talents, it's something that is extremely important. Building this company culture is going to take you places. And I think it's extremely important to focus on that. I would also add that perhaps I have a secret to tell you. When we are mentioning Valley of Death, yesterday a lot of people were talking about how difficult the context is in Africa at the moment. It's true. It's extremely difficult. I will spare you the usual saying, okay, to overcome the Valley of Death, you need to be extremely wise on cash. You need to be extremely conservative. Because all of this is true. But I think the secret here is to focus on yourself as a company. It's not about focusing on the rest of the world. It's not about trying to speak to everybody in the sector, speaking to funds, speaking to banks, speaking to providers, stakeholders, trying to build something out of the messy messages, the noise you're going to get from the market. It's not about it. Equity is not about it. Growth capital is not about it. It's about focusing on what you want to achieve as a team and where you want to land based on those ambitions. And if you are extremely clear with this story, if you are extremely clear with the place you want to go as a team, as an entrepreneur, even if it's not
for the
it's not
about
become you have the
question, and also thank you, Guilhem, for the nice overview indeed of what we also see. So at GET.invest, what we do is we work with over 100 companies and over 100 financiers to help them find each other. And indeed, I think, Guilhem, what you already mentioned, each and every financier is different. Equity financiers are looking for something else than the debt financiers are. And then again, there's a lot of grant money in the market that might also push us to yet again other targets or goals. So as a company, you really have to see first, okay, where do I stand? What is my ambition, my goal? What is my own plan? And which kind of finance strategy fits to that? So that means that not all companies will be looking for the same type of financiers. And what we try to do is to help the companies understand their finance strategy, understand what it is the financiers are looking for, to know the financiers in the field, to know the countries and all the opportunities that there are. But then to sit with a company and to really understand, okay, what do you need? What does a financier want to see from you? How can we make that fit? And then I'm not just talking about pitch decks or about financial models, but to go one or maybe two steps deeper than that, to really sit and see, okay, but what do you need as a company? What type of financier do you need? And then that can be a layered approach. I mean, I don't have to explain to any of you that probably a lot of companies, I mean, if there's grants available, often we jump on that. Equity, it's like the holy grail hanging above the market that everyone wants. And in the end, 9 out of the 10 companies end up with way more debt than they anticipated to go for in the beginning. And that's the market reality. And what we try to do is really navigate with companies on that, so that in the end, when you go and find a grant, that you also understand, okay, is this a grant that will actually help me become investable later on? So is this a grant that will help me become profitable, or are the assumptions for the grant giver such that I'm so much pushed towards, I don't know, I'm just saying as an example, such rural areas that will never help me become profitable when the grant is not there? Do you want to pursue that, yes or no? Or do you want, in the longer term, build a company that could be investable for the debt providers? So it's always a balancing act, and sometimes it's nice to do that exercise on paper, but then in reality you don't have the choice, because you have to jump on whatever money is available. And then when you are in a certain way of being financed and then find next steps, I think that is the type of questions that we are confronted with quite a lot. I think it won't come as a surprise to you that out of the 100+ companies that we work for, the biggest gap is equity. So we are always happy to sit together with people like Guilhem on stage. But and I think that is also something that we can confirm. Yes, it's very difficult. No, it's not impossible. There are still equity providers, but indeed to be that one that is then kind of chosen to be well, the company that receives the equity, it needs a lot of work. It needs a very professional approach. It needs to be ready to be in contact with the financier whenever it's needed, to be open about your plans, and so on and so forth. So, yeah, I think I'll leave it to there for now, but probably a lot more to come later on in the panel. Thank you so much.
Thank you so much, Danny. Of course. I mean, I totally agree with you. We may have like a wide variety of spectrums, a wide spectrum rather of instruments, ranging from maybe the equity, concessional loans and political insurance. But if we don't understand the investment criteria of the financier, then it becomes very difficult, of course, to unlock capital. So, and that leads us to our next speaker, someone that has been able to unlock capital, seed capital, good capital for his projects and his company. And BASSIR, we would like to know how you were able to do this. Of course, we understand that you are now enjoying, the marginal cost of renewables, of course, because as you are expanding, the investment cost is reducing or maybe staying at the same level because you're enjoying the rule of economies of scale. Of course, we recognize what you're doing. And we want to know how you were able to unlock this capital and how are you enjoying it and how can we learn from your experience?
I think that question might be for QOTTO because OLUSEYE is an investment fund.
For QOTTO?
Yeah.
No, for BASSIR. But you can share your experience with us as well.
OLUSEYE is an investment fund, so didn't access. So what I can share is how OLUSEYE has backed companies.
Yeah.
Across different phases.
Okay, that's fine.
So
Go ahead.
I'll mention a couple of examples. A couple of them in the room. So OLUSEYE backed a company called Oxano. So Oxano does assembly of solar panels, local assembly of solar panels in Nigeria that started before. And a couple of years ago, they wanted to expand and build a new facility. OLUSEYE was essentially the first on board, putting in equity into the company and has backed them through different stages, through the completion right now of their solar panel assembly plants. In addition to that, OLUSEYE has been very instrumental in making key connections for the company. So for example, this company, Oxano, had an issue with certification, quality certification for its products, which meant that it couldn't get into the NEP, which is a Nigerian electrification program, World Bank sponsored together with the Rural Electrification Agency in Nigeria. And OLUSEYE has been instrumental in helping them secure that certification. And right now they're at a point where they're exploring additional financing again, and we're still in the room and exploring and willing to continue to contribute to their growth. Another example I can mention is a company called Greenage. OLUSEYE invested in Greenage. Greenage is a company that does assembly of inverter systems in Nigeria. And that's another company that OLUSEYE invested in early stage. And this is the critical thing. OLUSEYE is catalytic capital and has acted that way and has met the industry where it's at and has always been willing to be at the tip of the spear in doing things that are most catalytic and of course also quite risky. So it's the right kind of risk appetite. But then the goal is to maximize impact and to enable overall the ability of the sector, energy access, renewable energy in Nigeria to succeed long term. But I would mention those two examples as things that we've done.
Awesome. Thank you so much, BASSIR. Thank you so much. And Gwladys, BASSIR didn't want to take his question, but he responded so well. And he has pushed his question to you. So, of course, vous allez répondre en français, il n'y a pas de problème.
D'accord, merci.
So you tell us how, your company, of course, has been doing so well, attracting, growth capital. and how you were able to do that. Maybe because we have, of course, we have like a list of companies here who want to also learn from your story. What kind of strategies, approach did you put in place to actually have this happen? Thank you very much.
Merci beaucoup. Effectivement, QOTTO, aujourd'hui, nous avons pu lever en 2023 8 millions d'euros avec le groupe IBL. Mais cette réussite est également due à beaucoup de travail en arrière. QOTTO, au départ, en 2017, c'était une start-up avec des jeunes qui, ensemble, ont développé une culture d'entreprise que nous avons renforcée. Ce n'est pas juste une culture d'entreprise qui est restée au niveau du management, du top management, mais du comité de direction. C'est une culture d'entreprise qui a été partagée à tous les acteurs de la chaîne et qui, derrière, ont été accompagnés à renforcer leurs compétences sur l'activité que nous menons. Et ensemble, on a construit une organisation structurée avec des données bien structurées sur lesquelles nous savons partager ce que nous faisons avec les investisseurs, les partenaires. Donc, il y avait une transparence dans l'activité à la fois en management, à la fois avec les collaborateurs et au même moment avec les partenaires, les investisseurs qui comprenaient de pas ce que nous partageons, ce que nous faisons au jour le jour. Et derrière, comprenaient que ce que nous devons faire, c'est ce que nous faisons en réalité avec le partage des données. Donc aujourd'hui, QOTTO, c'est, comme l'a dit Guilhem, on est beaucoup plus une entreprise qui a montré son savoir-faire et non une entreprise qui a montré des résultats époustouflants. C'était d'abord montrer que nous allons vers une cible qui n'était pas connue. Nous apprenons à les connaître en mettant en place des process clairs que nous apprenons aux équipes en interne à respecter avec la donnée. Derrière, au-delà de cela aussi, c'est montrer que lorsque nous sommes face à des problèmes, nous savons identifier les problèmes que nous avons eus et nous savons identifier des approches de solutions pour résoudre ces problèmes-là. De 2017 à aujourd'hui, QOTTO, on a fait face à beaucoup d'éléments. Nous avons un modèle économique basé sur le pay as you go. Et à un moment donné, nous avons par exemple observé notre taux d'utilisation du système qui baissait. Ça a été un élément sur lequel on a longuement échangé avec nos investisseurs. Mais aujourd'hui, ce taux d'utilisation qui baissait a connu une croissance de moins 10% de l'année dernière à cette année. Donc, derrière cela, on a pris conscience du problème qu'on vivait. On a déployé une solution sur l'ensemble du territoire pour être vraiment au plus proche de nos clients. Et on a également partagé cette approche avec les investisseurs. Donc, ce n'était pas juste des mots avancés, c'était des mots avancés avec des données bien structurées, claires, que l'investisseur aussi comprenait sans qu'on ne lui explique en fait. Donc, pour réussir ces levées de capitaux, de dettes et tout avec les investisseurs, voilà ce que nous avons fait. Et je suis ravie aujourd'hui que Gaia aussi en parle comme tel. Ce n'est pas juste regarder le capital, regarder le profit, parce qu'aujourd'hui, QOTTO n'est pas encore profitable, mais nous avons travaillé à améliorer nos indicateurs. Nous sommes aujourd'hui à EBITDA positif et nous travaillons désormais à atteindre une EBIT positif. Donc, c'est vraiment montrer une progression d'action, une progression de résolution de problèmes avec la cible, avec l'activité et montrer également que ce n'est au-delà de ce qui se passe sur l'ensemble du marché solaire, il y a une manière de travail quand même qui fait une différence, qu'on arrive à implémenter dans tous nos pays, c'est-à-dire le Bénin, le Burkina Faso et la Côte d'Ivoire. Donc, ce sont ces éléments qu'on a mis ensemble pour bénéficier des fonds qui ont servi à augmenter le capital, parce que pour nous, pour aller vers la rentabilité, nous sommes restés sur ce modèle avec la dette que nous faisons des rachats de dettes. Nous faisons également des entrées en capital parce que à la fois tu achètes du matériel pour le pay as you go, à la fois derrière ta dette augmente parce que tu attends d'être remboursé pour pouvoir combler ce rachat de matériel. Et donc derrière, ça a permis d'avoir l'augmentation de capital. Et c'est dans ce modèle que nous sommes continuellement aller vers des augmentations de capital. Et aujourd'hui, également prendre ces fonds pour faire l'expansion du réseau commercial et de l'activité. Merci.
Ah, très bien, Gwladys. Merci beaucoup. Vous avez parlé d'une des stratégies que vous utilisez pour adresser les problèmes que vous rencontrez avec les bailleurs de fonds. Est-ce que vous pouvez citer une des stratégies que vous utilisez pour avoir une communication efficace avec les bailleurs de fonds, s'il vous plaît?
Un modèle efficace que nous utilisons avec les bailleurs de fonds, ce sont les données. Vraiment, ce sont les données. Aujourd'hui, QOTTO, c'est une entreprise totalement digitale. Pour adresser la cible du milieu rural, mais du milieu mal desservi par nos différents services, énergie, Internet et services financiers, Ce sont des commerciaux qui ont déjà une application sur téléphone. Donc, nous travaillons vraiment à ce que chaque personne de la chaîne suive le processus indiqué. Et s'il manque de le suivre, il est accompagné par le management qualifié dans ce sens. Donc, ça a permis d'avoir des données vraiment structurées, claires, sur une plateforme également facile d'usage, sur lequel les partenaires aussi pouvaient avoir les informations comme nous le voyons. Aujourd'hui, la plateforme de QOTTO, c'est une plateforme qui permet de suivre à la fois l'usage du système chez le client, de suivre également derrière tous les indicateurs qui se mettent à jour au quotidien, que nous partageons à ces investisseurs. Au-delà de cela aussi, QOTTO, c'est une entreprise qui ne cache pas ses process. On est vraiment très ouvert sur nos process. Comme je le disais tout à l'heure, ça a été de leur montrer que nos clients, nos commerciaux, nos équipes sont à côté des clients, vivent dans le même milieu avec eux, comprennent les enjeux auxquels ils font face pour vraiment rester dans l'usage du système solaire, des différents services qu'on leur apporte. Et c'est ce qu'ils ont vécu aussi en venant vers nous. Ce n'est pas qu'on a su faire une réalité sur un papier, leur a partagé, et après, dans le contrôle, ils ont vécu autre chose. Donc, ça a été vraiment montrer ce qu'on fait, faire ce qu'on dit et dire ce qu'on fait.
Très bien, merci Gwladys. Oui, on partage les mêmes idées, les données est clé. Très bien, merci. We go to Nekesa. Nekesa, so now we are moving to another area, of course. We have been talking about the conventional financing mechanisms that we have been using to unlock capital. But all these are proving to be not very efficient, because that is why you see the continent is very dark in terms of energy supply. So can you tell us what innovative solutions or innovative mechanisms that your company is using to unlock capital for your projects?
Yeah, sure. So maybe I'll break down this question by the two access to energy funds that we manage under our direct investments team. So as I mentioned, we closed on the Energy Entrepreneurs Growth Fund in 2019. So this was ideally Shell Foundation and FMO spearheaded mandate. And since then, we also catalyzed additional DFIs. So there's DFC in there, FinDev, NDF, and the Australian Development Bank. The thesis really behind the fund was to come in and fill in the gap that was existing in the market. So within the access to energy market, there was, I think now the market is about maybe almost 2 decades old. So we are seeing a lot of growth stage companies. So we were seeing a situation where there was quite a lot of debt in the sector, and then the equity was really drying up. So the thesis behind the Energy Entrepreneurs Growth Fund was really to come in and really fill in the gap with non-dilutive capital. So within the EEGF, we mostly deploy mezzanine capital. I know mezzanine is quite a broad word, which can range from very equity-like instruments to very much debt-like. But this flexibility in the mezzanine instrument is what is helping us really cater to businesses in this growth phase within the access to energy space. So we really try to structure our instrument, with longer tenures of even more than 5 years. We try to sculpt the repayment so that they're pushed out in the later years. So that means the companies then also have some time to build their assets, and then they can leverage that either to raise more debt or raise more equity down the line. Maybe just it's worth mentioning that within the Energy Entrepreneurs Growth Fund, we also do deploy equity and senior debt, though they're in slightly lower allocations. But typically, we would try to, in some instances, for example, where the equity is really thin, we could try come in with a little bit of equity and layer on with like junior debt, or we could try make some structures with junior and senior. And I think this flexibility really is what is helping us, innovate around the instruments we can invest in. And maybe just to mention, on top of the instruments, the idea is to go into these companies, and during due diligence, most of the time we'll identify maybe some key gaps, whether it's in finance or in the operations or governance, and we'll typically try to provide these companies with some technical assistance or capacity building so that they're actually able to, go through this phase of growth and attract larger pools of capital. I think one of the things that was quite interesting was that during the COVID period, we managed to to be awarded the tender to manage the AFDB COVID relief program funds. And basically what these funds have also enabled us to do is that we'll typically blend them with the typical instruments that we will usually disburse, and then try to offer maybe lower interest rates to clients because they really need this. So lower rates over longer periods of time, just to also give them that room to grow. And on top of this, we really try to, in places where we can, we really try to hedge. I know hedging has become, is such a complicated topic as well, and in some markets it becomes very expensive to hedge. But we try, in instances, we're working through TCX and MFX to try and deploy in local currency. I think, as you all know, there's also typically like an MFX pricing facility. So this facility, if we're able to apply for it on some of the deals we work on, we're able to pass some cost savings actually to the companies we invest in. And let me see also what else to touch on. So maybe moving now to the CEI Africa side. This fund is structured a bit different. So it's called the Clean Energy Inclusion for Africa. It's a KfW mandate. And the idea behind the fund was really around catalyzing this private capital that we're talking about. So it has two windows. We have a crowdfunding window, which is being led by Persistent. So Persistent is really leading on the origination and shortlisting of the deals. And the idea is that we provide risk-taking capital to the crowdfunders so that they are able to catalyze more retail investors. So we'll typically come in either with sub-debt or quasi-equity or guarantees. And then hopefully, once we take on the very first loss risky layers, then private investors could be motivated to put in capital in some of these crowd lending platforms. I think we all know, especially during the COVID period, the crowd funding platforms have really struggled because most private or retail investors were moving away from investing in these crowdfunding platforms because the disposable income had actually also really gone down. So this is one of the ways we try to do that. And within the CEI Africa, we also have something called the RBF, or the Smart Outcome Funding Window. So this side of the investing is really grant-based. So this CEI Africa was really spearheaded by the German government through KfW, and the idea was really that they were trying to help de-risk crowd lenders, at the same time also have a component to help de-risk mini-grid developers. So if you can come in and provide the mini-grid developers with the RBFs, then through those de-risk structures, maybe they could pull in private capital. And we really also try to innovate around that, where in some instances where let's say the developers don't have the construction capital, we can also disburse some of the grants as construction funding so that they can actually unlock the RBFs and hopefully pull in more debt and equity down the line. And maybe just one more thing to mention, just in terms of CEI Africa, we have some interesting component also called the Smart Outcomes funding window, and this one is really geared towards the productive use sector. I think we all know the productive use sector is quite nascent, really requiring a lot of equity to take off past this early stage financing phase. And the idea is, we borrowed concepts from like the ag sector and the wash sector to really try to create smart-based grants. So basically, once these productive use companies deploy the assets, then once they achieve the impact, then they get awarded the grant. So it's really just a way to really incentivize these businesses to go through this early stage of development. It's been done in partnership with the Swiss Development Corporation. And in line with all this, I think one of the things we are really just big on across the two funds is technical assistance. I think we all understand that the companies in the sector are all trying to work towards growth. They're all trying to be sustainable. They're trying to really last the long haul to create this big impact that we talk about. So we really do double down on our technical assistance, and I find that as one of the innovative ways to actually deploy capital. But yeah, thank you.
Perfect. Thank you so much, Nekesa. That was quite exhaustive and conclusive. Thank you so much for your contribution. So we'll move to the second phase of our discussion, which is the moderated debate. Of course, I know we have our colleagues who have like some questions. So let's take 1 or 2, 3 questions from our speakers. Then after that, I'll open the floor for our colleagues to actually intervene. So yeah, I mean, I think I have like 2, 3, 4 questions for the speakers, and of course, you're free to choose whatever you want to respond to. The first question is related to, of course, we keep talking about the energy transition. And when we look at IRENA's statistics, we need about 3.6 trillion USD, to achieve the transition we want by 2050. And when we look at this, of course, it makes us to panic, right? That's a lot of money. That means that we have to see how we tap a little bit from the private sector. Because the private sector is a good source of finance, it's a good source of technology, it's a good source of knowledge. So how do you think the public and the private sector can actually collaborate? And what respective role do you think each of these entities can play? So I don't know, maybe Dupuy, will you want to take that?
Yeah, obviously it's a very good question, and I think we've come a long way as a sector on this topic from, I would say, the onset. When you look at what happened perhaps a decade ago when the solar home system sector, for instance, was taking off, I think there was this belief in the private sector that pay-as-you-go strategy for solar home systems were going to save the day and were going to solve the energy access gap and challenge in Africa just out of private operations, private capital. Obviously, it's been helped and supported by DFIs and public money, but the private element was perhaps a bit overarching and was trying to achieve too much with a single technology. And I think we've learned from that, right? The sector as a whole has evolved towards a more diversified base of technologies. For instance, now mini-grids are extremely well-structured, productive users of energy as well. You are seeing more and more companies testing innovative models in these fields. And what's happening is, especially if you're looking at the mini-grid sector, what's happening is, naturally at some point, the governments in Africa kind of stepped in and say, okay, energy, it's a public good. It's supposed to be a public service, and so it should be treated as such. And I need to have an open debate with my citizens about what's the fair price for energy. It's not as simple as that, obviously, because, as everybody around the table here knows, energy access is an issue, is a very structuring issue in Africa. A lot of people don't have any kind of access to energy, so price, even for people in the rural areas, it's always extremely high. But once you try to rein in all of those diversified sources of energy and build a public strategy for rural and urban electrification in your country, then you are supposed to have an open and debated plan for tariffs. So once you're clear about that, it kind of paves the way for good collaboration levels between the public sector and the private sector. Because once you're clear about what's your tarification strategy, what are your tariff level, acceptable level for the mini-grids that you are going to support and subsidize with the help of grants and DFIs, once you're clear about whether you want to accept cost-reflective tariffs, for instance, which again, it's not for every government, it's not for every people. Sometimes you have, conception of public service, which is much more universal. You want to have flat tariffs because this is the way you think of yourself as a people. And I think that everybody ought to respect that. But once you're clear, you are paving the way for private sector involvement. And it makes for clear rules to be engaged with. And you decide to step into a market with clear rules, or you decide to not do that because you don't see profitability, you don't see growth prospect, but at least you're clear about what to expect in a country. So having those high-level frameworks, I think, is extremely essential, and making them stable, obviously, is going to be a key way forward. But when you look at private sector involvement, there's been a bit of encroachment, as I said, in the first steps of energy access initiatives with solar home systems, for instance. Now, and it was also because of equity investment funds, such as myself, because we tried to look at extremely compelling growth stories. We tried to look at, okay, those guys developing solar home systems, selling them on a pay-as-you-go basis, they are going to open a market so gigantic that the equity opportunity is massive for me. So I'm investing a lot of money in loss-making companies. I'm not paying attention to unit economics. I'm not paying attention to execution capacity. And in the end, it results in bloated expectations, disappointment for everybody. I think that we've kind of recovered from this period, especially equity investment funds. I think the issue now is that a lot of people kind of, were disappointed with the results of the companies they invested into back in 2012, 2015, 2017. I think this is one of the key reasons why equity is so rare at the moment. And we have to face it. Everybody's saying, yeah, there is no more equity in the sector. Everybody's saying there is like 10 times as much, debt funds as equity funds. So in the end, who's going to invest those debt instruments? Because there is no equity to leverage. So everything's locked. I think we have to face the fact that if equity is not around anymore, at least not in the proportions that it should be, it's because equity has been disappointed with a lot of companies' performances. And again, I'm not saying that there is not like a renewed strong potential coming from new generations of companies, coming from new generations of local entrepreneurs that has set ambitions to realistic levels. Now we are seeing more and more extremely interesting local companies, regional companies are developing innovative solutions. And then I think there is a way forward for the private sector involvement now that I think the level, the playing field has been kind of leveled in a sense, has been, put to a stage where we know exactly what is a realistic expectation from the private sector involvement, from what, private companies can deliver, and also what is the role of the public sector in terms of setting the rules, in terms of financing, but also giving liberty to the private sector and private companies.
Wow, thank you so much, Dupuy. Yeah, we have been talking a lot about financing instruments from equity, guarantees and insurance. But now I want you to move to the second question. So how do we put in place what I would call an innovative financing structures that actually bring together the public and the private sector to help them, of course, overcome this barrier of accessing capital for expanding, our energy systems in Africa? So I don't know who would like to take that. Okay, thank you so much, Daphne.
Yeah, thank you for that question. Because I was actually thinking when Guilhem and also when you were talking, and I was thinking, well, what if we would have 10 Gaias, 10 Olons, maybe 20 triple jumps sitting here on stage, and then there's QOTTO. Are there literally enough companies to then also push us forward? And obviously, yes, there's more companies that are ready to be financed, that are able to absorb equity, that are able to absorb the debt that is available. But on the other hand, it's also sometimes the case that we see companies receiving grant finance, for instance, and then using that grant finance to, I don't know, be very much a sales push, for instance. Just make sure that you have numbers that you can then show your investor. But the investor doesn't only look at the numbers, they want you to build a company. I think you mentioned, if my French is correct, that you are also building standard operational procedures. You're building, call centers is the easy one, but you're using money also to have an institutional strengthening of your company. And I think also if you look at how, the ideal financing landscape, so to say, would indeed be concessional finance as well as more commercial debt and equity. But it has also to have their own functions. And I think grants, yes, they are needed, very much so. And I think it's actually a pleasure to be able to say that out loud after we have been denying that for so many years. Yes, grants and concessional money is needed. But it would be very interesting and intriguing if the people providing those grants and providing the concessional money do think about what they want to achieve with it. And I often feel that there's two things that they want to achieve at the same time, and it's building a profitable market and at the same time going for the most impact possible. And sometimes those two are not being able to combine that in one grant, because as a company then you might have to choose to go to areas where normally you wouldn't go because you can't make them profitable without a grant. But then are you hooking yourself up to grant after grant after grant, you know? So that is a question, and it is a challenge. So if you are a concessional financier, it's also good to consider that. So do you want to make sure that your companies also can use part of the concessional finance or part of the grants to build up their profitability? Maybe make sure that the grant money is also a bit more patient money, I want to say, that you don't ask for co-financing straight after 2 or 3 months, so that you give the company the opportunity to build its institutional strength. So I think combining this impact drive and the need of building a profitable industry, that would really help in the bringing together concessional finance and well, more commercial finance as we have here on stage.
Oh, thank you very much, Daphne. And I have a follow-up question for you, Daphne. So yeah, I have a follow-up question. So presuming, let's assume that we have all the right structures, we have all the right instruments in place. Another key objective will be, how do we assess them? And of course, we need to understand the investment criteria of the donor. And one criteria that is being mainstream nowadays is the ESG, Environmental, Social, and Governance Standard. So how does this criteria influence your decision in actually, you know, ensuring that you flow, or you unlock money and provide funding for projects?
Yeah, thank you for that question, because I think it's an important one. We see many companies, obviously, that have it implicitly. We are all impact-driven, but a lot of financiers want to see it explicitly. They want to see how you're addressing those factors, how you're addressing, and how you are following, how you're measuring, what procedures you have in place. And it's not just around ESG. It can be about your credit risk management. It can be, you know, there's so many procedures that you have in place that are maybe seen as something that only the financiers want, so that are not core part of your business. But if you want to be financed and if you want to be growing, you will meet financiers for whom it's essential. And it's not just ticking the boxes. It is something that you have to have integrated in your company in order to be investable in the longer term.
Thank you very much, Daphne. And you want to add more context to what? Okay, yeah, Gwladys, okay, yeah.
So the way I personally see it is that all investments that pertain to energy access especially is ESG by definition. It's impact-driven by definition. And what that means is that every single investor in that space has to be very actively mitigating, you know, environmental, social, and governance risks. They are substantial. So, for example, in the mini-grid sector, what we've consistently found across geographies is that developers are pretty good at finding sites, decent at deploying sites, but they're very poor at financial management, for example. So they need, investors have to be actively mitigating those kinds of risks. And the social is always underrated. So again, mini-grid sector, you're putting this equipment, this facility in a place in the middle of nowhere with a community that just absolutely has to buy in. And it has to be a symbiotic relationship. I think where the disconnect comes sometimes is that ESG sometimes very often is being treated as if it's some, you know, like a checklist type exercise where I just have to check this and I've done ESG. Whereas if you're, whether you're a developer, whether you're the government, whether you're investors, but especially investors, it has to be a central part of your thesis. And it has to be something that you incorporate and you're doing all the time. Yeah.
Thank you very much. I think Gwladys, vous pouvez dire quelque chose?
Merci beaucoup. Je voudrais d'abord me prononcer sur la question précédente, celle de comment le setup public et le setup privé pourrait quand même collaborer pour améliorer les questions d'investissement sur le secteur des énergies renouvelables. Et effectivement, en démontrant, nous, de notre part, QOTTO, notre activité, la qualité de nos process, la structuration de l'activité, les freins souvent que nous avons dans la recherche de financement, c'est les demandes de garantie, comme il le disait, et les taux de capitaux, les taux d'intérêt très élevés. Et donc, pour nous, aujourd'hui, le secteur public, le secteur privé et après, la cible, la population, il y a plusieurs éléments qu'on pourrait également mettre en œuvre. Par exemple, avec le gouvernement ou peut-être d'autres organisations, c'est comment constituer des capitaux pour servir de garantie pour les entreprises privées qui veulent se développer. Parce que lorsqu'une start-up commence avec une idée innovante qu'elle a testée, souvent les premiers besoins d'investissement, on demande de la garantie. Et elle n'a pas la garantie et c'est là qu'elle meurt en fait. Parce qu'elle va chercher de la garantie, force vaille que vaille, et n'arrive peut-être pas à donner le nécessaire aux exigences des partenaires. On pourrait également mettre en place ce système de financement où l'État constitue peut-être une garantie, un fonds de garantie pour supporter ces entreprises qui ont prouvé l'impact de leurs solutions et leur capacité à atteindre des objectifs peut-être à la petite échelle pour passer d'une petite échelle à une échelle beaucoup plus élevée. Au-delà de cela aussi, en termes de subventions, une entreprise ne peut pas rester tout le temps sur la subvention. Madame Daphne l'a bien dit. Et effectivement, les autres outils de financement qu'on n'observe pas en termes de subventions, en Afrique souvent et aussi au Bénin, c'est la subvention qui va directement aux bénéficiaires. Comment on peut mettre en place une subvention qui va directement aux bénéficiaires et qui permet à ces bénéficiaires de revenir vers les entreprises privées et permettre ainsi de développer l'activité, d'agrandir le portefeuille, d'améliorer la dette et d'arriver à faire des demandes d'entrée en capitaux. Donc, il y a également ça qu'on pourrait penser faire. Et au-delà de cela aussi, c'est toute la structure fiscale. Parce que nous avons choisi en termes de modèle de business de pay as you go, mais d'un point de vue fiscal, il y a des freins. Les premiers freins qu'on a observés, c'était d'abord la comptabilité, le type de comptabilité qui exige que ce soit une comptabilité d'engagement. Une comptabilité d'engagement ne rend pas l'activité profitable. L'exigence de rentabilité est très proche et ce qui n'est pas viable sur ce modèle-là. Et l'OADA aujourd'hui ne permet pas encore une comptabilité suivant les recommandations de Gogla et Benyoh, l'IRFS 7, l'IRFS 15 et autres, en termes de système de comptabilité. Donc, ce sont des éléments encore que les États et le secteur public doivent encore améliorer pour soutenir l'activité et permettre à l'entreprise d'avoir quand même un état financier, des résultats quand même financiers, des indicateurs financiers intéressants sur lesquels les partenaires comme les investisseurs pourront se baser, se dire, c'est une entreprise qui a de l'avenir, qui est porteur, sur lequel on peut quand même apporter notre part et l'aider à aller beaucoup plus loin. Mais non, au-delà de cela, aujourd'hui, le secteur de l'énergie renouvelable, nous avons beaucoup d'entreprises. Et je pense que Guilhem ou Daphne l'a également souligné. Pour aller maintenant vers la recherche de capitaux et tout, d'entrée en capital et tout, on peut également penser aux fusions. Parce qu'on est assez nombreux sur le marché. On a beaucoup de solutions. Aujourd'hui, certaines solutions se rejoignent, mais les produits ne sont pas les mêmes, ne sont pas complémentaires. Donc, au niveau du secteur privé, c'est comment nous, on peut se mettre ensemble pour définir des produits complémentaires, soit agrandir un peu le marché de par une fusion pour soulever maintenant des investissements en termes de capitaux. Après, sur la question des conditions d'environnement social et gouvernementaux, c'est vrai que chez nous, ce n'est pas les éléments qui sont le plus soulignés parce que nous sommes sur le secteur SHS, c'est beaucoup plus avec les mini-grids. Mais aujourd'hui, cela encore demande beaucoup de sensibilisation avec le secteur privé. Parce que c'est devenu des problématiques que soulevaient déjà les premiers acteurs sur l'activité. Et derrière, chaque partie reste dans une tendance de préservation de ces indicateurs sans pour autant s'ouvrir à l'écoute attentive des problématiques du milieu même, afin de définir vraiment la bonne approche pour respecter ces conditions environnementales, sociales et gouvernementales. Merci.
Très bien, Gwladys. Thank you so much. I think, Dupuy, you wanted to add more context to what our colleagues just said? Or?
Obviously, it's a very important topic. I would say that there's two levels. ESG, obviously, is more about internal procedures and the way you are going to manage your performance, your processes. There is also the topic of impact. And, you know, Gaia, we call ourselves an impact fund. And we do think that when we are seeking out impact returns, they are totally in tune with the company's financial objectives. Because in the end, when you're looking at bringing in more beneficiaries, saving tons of CO2, making sure that your clients are happy, you are kind of at the crossroads of financial management, operational performance, and impact. For instance, you know, a concept that comes from the impact world, which is the net promoter score, whether your clients are happy, whether they will be ready to recommend your product or your services. This comes from the impact world. It's been applied as a benchmark, you know, approach to a lot of companies in the sector, but in the end, it is core business, and companies are making a difference as brands, as client-facing operations, when they are working on boosting those scores. And so client engagement, making sure that you have a product that has a proper social license to operate, that is properly accepted by the local communities, is extremely important for your core business. Same thing for the mini-grids. I mean, there is the official license to operate. There is the concession agreements that you are going to get with the Rural Electrification Agency, but there is the social license to operate. You are nothing if you are not accepted by the local populations, if you are not making the right gestures, if you don't have the proper management system on everyday basis to making sure that your clients, their complaints, their doubts are being well addressed. So when we're talking about ESG and impact, I think we're also talking about those core operational and financial topics. So I do think that we have, as financiers, as investors, even if you are not impact focused, you have to learn a lot from those KPIs, or those benchmarks, and what comes from these ESG frameworks.
Perfect. Thank you so much. Yeah. Okay. You have like 2 minutes before you take the last question.
Yeah.
Because I have one question for you.
I just want to add on to what Guilhem was saying, especially on the ESG, because I think all the panelists here have mentioned that we are operating in impact-driven sectors, and that's at the core of really what we do. But my message really then is to the developers, the distributors, the manufacturers of some of these products. Let's have the consumer in mind. Let's provide our people products that can last longest, even if it's solar home systems, not systems that are breaking down. And then let's also have the environment in mind, because we can't be providing renewable energy assets on one side, and then on the other side, we are degrading the environment. And I think that's why even topics like around e-waste are also really becoming such a huge component right now. And maybe just to add a bit on the ESG, I think this is one of the things as a sector and as companies, or us as investors, we really try to help companies continue to build on, because the expectation is that the companies also, as Guilhem said, it's really about developing the internal systems of some of these companies. So how do they look at gender? How do they look at economic empowerment? How do they look at consumer protection, governance policies for staff, etc.? It encompasses really all these things. And I hope all the entrepreneurs in this room really think through all these things as they also think about electrifying Africa.
Perfect. Thank you so much. I think we are all aligned. We are aligned on all fronts. And just to add more context, I think like you mentioned, Dupuy and Daphne, of course, we need to raise awareness. We need to sensitize, you know, the private sector that ESGs are not just simple checklists, but these are investment criteria that, of course, donors, financiers will actually consider to see that projects are actually bankable. So, I mean, that's a very good assignment for us. And the last question, Daphne, before we open the floor for our colleagues to intervene. I mean, like now we have talked about all, you know, the good things, the good instruments, you know, the right structures, the right mechanisms that can actually help to unlock capital. But now, when we look at the upstream intervention, where we start talking about the policy, which is very important to attract investment. Because if we don't have the right policy in place, there's no way we can actually have all these instruments. So when we look at that policy part of it, how we try to de-risk the investment, I mean, try to maybe analyzing, you know, the underlying barriers, I mean, that are the main causes of the risk. So how do you think, you know, policy intervention can help to provide an enabling environment that can lure and attract investment for decentralized energy systems in Africa?
So I think on the one hand, policies really are supposed to develop frameworks, you know, frameworks within which these private companies are supposed to operate and provide energy to consumers. So I really applaud, let's say, governments like Kenya or Nigeria in really trying to develop energy policies, trying to develop mini-grid frameworks, within which you can provide like proper guidelines for operators to also be incentivized to come and develop projects. I think on the other hand, policy also drives capital allocation. And I think because we're also really discussing about capital, maybe I'll focus on that. For example, this CEI Africa mandate I was discussing, it's really being spearheaded by the German government, and they're making conscious decisions and policy allocations to provide grants, which, as we all know, is very needed in the sector. I think it's quite interesting that energy really is a basic need, but when we look at the cost of capital of actually within the African market, it's too high. And the only way this cost of capital will come down is through this de-risking structures. So we do need policies that are driving more concessional capital into the African market. We need more RBF programs. So the current RBF program we have is actually fully allocated, and it was allocated quite quickly because it really just speaks to the level of demand that's there among the companies. I think we need to see more maybe guarantee programs, like the World Bank Mega Guarantee, which also helps us sometimes in deploying capital in very high-risk areas. So we need to see more of such policies and frameworks also like the TCX has on reducing hedging costs. I think these are the only ways the private sector or private financiers will come in and invest in these sectors. But yeah.
Perfect. Do you want to add more context? Like 1-2 minutes maximum?
Yeah, so government and the public sector has a very critical role to play, not least with policy, but quite a lot of things. So especially in developing countries, and we're in Africa right now, and being able to mobilize domestic pools of capital is very, very important and very significant. As it stands, most of the capital that is driving energy access is global or international. And that capital very often leads, for example, to currency mismatch and forex risks. And that's a very, very big one. In Nigeria right now, currently very topical because the Naira lost a lot of value. But then not just in Nigeria, if you look at the last decade, you would see that across Africa, most African currencies have significantly lost value. And so it's important. So one of the things that we see consistently is a lot of institutional capital stays here, and that's where the industry is at. And then they're like, okay, we're here. Whenever you get here, meet us here. And that capital has to meet the industry where it's at. And I think that matching happens better at a domestic country level if you're mobilizing capital in your country. So that's very important. And then the other thing that is important with government is just being able to walk that first mile. So getting data, building skills of people, training them, creating entrepreneurial systems, and just all of those things, and generally having a plan for your rural sector. And the other thing is, with energy, the answer, in my opinion, is always all of the above, different approaches. And because you have to take different approaches, you have to have a sector-wide planning for different things. For grid extension has to be part of the solution. Mini-grids, standalone mini-grids have to be, interconnected mini-grids have to be part of the solution. And many other different approaches. And so having that overall planning and looking at it again and again is very important. But then the most important is your macros, your macroeconomic environment, what's happening with your inflation rate, what's happening with your savings rate, what's happening with your literacy rate, what's happening with all of those things, because in the end, that is what sustains investment long term.
Perfect. Thank you so much, Bassir. Thank you so much. And now we'll open the floor for, of course, we have colleagues here. that we want to ask 1 or 2 questions to the panel. So please, yeah, please. Is there a microphone, please? Or maybe you can have this one.
Thank you. Axel Deville from ADA in Luxembourg. I really like when you mention we need to differentiate risk perception and effective risk. And I think it might be useful for the investors to publish historic effective risk. I mean, from our side, we invested for more than 20 years in emerging microfinance institutions, Tier 2, Tier 3, who now became investable by impact investors. The effective loss is 1%, even if initially it was expected to reach 5 or 7%. So 1% is easily manageable in the business model. Based on that, I would like to raise a question of return. It was mentioned yesterday between 15 and 20% return. Is it based on perceived risk or effective risk? And I think that in many cases, they expect such high expectation in terms of return is because the investor doesn't know and need to learn. And this is not to the investee to pay the fact that the investor needs to learn. So I personally recommend, and how could we encourage investors to come with long-term, more than 5 years, 1-digit return, and also ensuring locally based equity, because I think it's really something that I would like to have the input of some speakers about how to promote locally owned equity, long term, and less than 2-digit.
Yeah, so I think the return expectation, there's a component of it that is perceived, and then there's a component of it that is effective risk. And so if you look at private equity, so the most active investors in Africa for a long time have been DFIs, development finance institutions, the likes of IFC, IFU, Propaco, and the likes of those guys. And let's say around 2012, a lot of them invested heavily in private equity, right? And private equity funds could go further than they could. And effective returns were low. Effective returns were 7%, sometimes below the returns that they got from direct investments. And the major reason was currency. The African currencies lost value. So they had good effective return from their investments in local currency, but then when you convert it back to, and I'm just going to say that that's another reason why you have to develop local capital pools. And if you look at what has happened in Nigeria with early stage tech ventures, the VC industry, from 2014, which is just around when Andela raised their first funding, right? To about 2026 years, the industry went from 0 venture capital going into the country to about $1 billion. And many things happened. One of the things that happened was there were good poster boys of fast growth. There was mobilizing the creativity and innovativeness and the passion of young people, right? Meeting them where they were by having local reference points, poster boys and that then also mobilized angel investors within the countries and within the diaspora. So in Nigeria, for example, the Nigerian diaspora has been a significant source of seed financing for a lot of VC finance companies in Africa.
Perfect. Thank you so much, BASSIR. Maybe, do you have any question? Please, colleagues, the floor is open. Feel free to intervene and ask questions. If we don't have more questions, you want to say something?
Yeah, maybe if we don't have more questions, I maybe do want to add something to the discussions. Because we have been talking a lot about finance instrument, the ESG criteria and so on. And maybe just as some final inputs, I would like to add that at least we at GET.invest, we have been working with so many companies that are investment ready, that do check all the boxes of everything we have talked about. I'm very happy that indeed we have QOTTO here on stage. And I know there's many, many more walking around in the rooms. So indeed also the question from the room from Ada, there are many more companies that indeed could be financed. And sometimes we do need a different lens, or sometimes not even. Sometimes they're not known or they don't know how to access the financing. We help with them, and I'm happy indeed Triple Jump has a TA program, so there's many more. But just wanted to put that on the table for this panel, as well as a final shout out that it's not because of lack of investable companies that the sector is maybe difficult to advance.
Perfect. Thank you so much, Daphne. Dupuy, you want to say one last word? You have 2 minutes, please.
Yeah, it's a very good point. I think this question of perceived risk versus real risk is extremely important. It's what have been driving up cost of financing for companies since the beginning of the existence of the sector, because there is some kind of a waterfall here. I mean, you have the risk-free rate, you have the rate at which theoretically you can get, local financing from banks, which is extremely expensive in Africa. Then you have the local international debt funds that are going to have a premium because you have to repay in hard currency. And on top of that, you have the equity premium that makes it the most expensive source of capital. So there is a waterfall that makes for inflationary financing conditions, especially for local companies invoicing in local currency. So I think mobilizing private capital and public capital directly in country from local sources is extremely important. And so there is obviously the importance of equity at the local level. So angel investors, you mentioned it, pension funds, how to unlock that. We are seeing examples from Southern Africa coming up. I was in Zimbabwe. There is a rule for local pension fund to invest a portion of their assets into renewable assets. That is interesting. But there is also the question of what about the involvement of local banks? What about this question? They still are shying away from renewable energy investments. They still think it's too risky. And we know that in terms of track record, in terms of assets, it's extremely riskless. You are investing in assets that are durable, that are working, that are extremely efficient from a cost-based perspective. So there needs to be a cultural change from local banks as well that is going to be driving down cost of financing. And then the rest of the waterfall is going to align itself.
Perfect. Thank you so much, Dupuy. I think a colleague has one last question. Yeah, please come on. Okay,
I have a public address system here. Thank you. So you talked about developers having access to good areas.
Please, we cannot hear you. Please take your mic closer to you.
Okay.
Yeah.
Thank you. Can you hear me now? Okay, thanks. So you talked about developers, right? Being able to get good sites for their buildings. They're able to get green areas, while they are building. But you said one of the setbacks that they experience is managing their finance. So now, do you have a program, let's say after you are able to help them with equity, do you have a program that checks them on how they manage their finances, execute their programs or projects, then come up with a good return on investment? Thank you. That's my question.
So who is taking that? Who wants to take that? Okay, BASSIR. Yeah. Okay, perfect.
So the answer to that is yes. One of the approaches that Olon takes to investing is creating a pipeline of good, strong developers and supporting them through from ideation to when they hit the market. And some of the services that are rendered includes, or the value add or the support that is given is improving things like financial management. But then it goes beyond that, right? Because when they then get actually invested in from early stage through growth capital, that's where we are looking to get better as well in adding value to those companies, to helping them just manage their finances very well. Because mini grids are complex to manage, and where we are, the energy access problem that we have is so gigantic that we're at a stage where, for example, in Nigeria, the largest mini grid operator maybe has 15 or 20. They need to be at 200, right? Need to be at 500. If you're looking at the scale we're looking at. And once you start to scale, managing that finance is going to be critical. So, and that's where organizations like Olon also have to become better at providing that kind of support. Yeah.
Perfect. Thank you so much, Bazi. Do we have more questions, please? More questions? So if not, let me just add to what Bazi just mentioned for those who are just joining now. I would like to talk a little bit about the UNDP Rome Center, where I come from. So we are based in Rome, and we have the mandate to actually help countries in Africa develop an investment plan. And this investment plan, in principle, is a pipeline of bankable projects, just like what Bazi mentioned. And we operate in three phases. So we operate in the phase of project origination, then we go to financing, and the last phase is implementation. And during the process of project origination, we actually have like group discussions, focus groups discussions, consultations with project owners, project developers to identify like bankable projects. And we have a very specific approach where we start by having discussions like with the state government, conducting desk review to understand like government priorities, to understand like government's renewable energy master plan, to understand the different sectors and subsectors that government want to invest in. And that we try to identify projects that actually align with the expectation of the government. And just to mention that as UNDP Rome Center, we do not have money to provide funding for projects, but we can actually facilitate. We can help to unlock capital for investors, for project owners, by actually having direct consultations and direct access to our financiers. So we have a pool of financiers who have like a wide spectrum of instruments that they provide to help bring your project to bankability. So I will not want to take much time, but if you want to know more about the UNDP Rome Center, please feel free and come to booth, Rohit, what's the booth number again? 21. Please come to booth 21. Then we can have like one-on-one discussions. Then we can tell you what we do at the Rome Center and the kind of support we can provide for your projects. So, dear colleagues, ladies and gentlemen, thank you very much for your kind attention. And we have come to the end of our session. Please enjoy your lunch. Thank you so much, and feel free to go. Okay. Please, 1 second before you move, let me pass over the mic to our.
Okay, so thanks a lot for this session. Just a quick word to close this first half of the day and this session. I hope you enjoyed it. So now it will be time for lunch, which is my favorite time of the day. As for yesterday, so there is 2 restaurants. The yellow lanyards go to the red restaurant, which is on the left. On this building, and the gray lanyards go to the Sky restaurant because there is too many participants, so we have to divide in 2. And the Sky restaurant, it's in the lift next to the reception, and you have to go to the top floor. After the lunch, so we will start again at 2:30 with 2 sessions. One in the grand ballroom about seizing opportunities for direct-to-power industries for the green transition, and one in the Fantasia ballroom, scaling up finance for e-mobility. So once again, thanks a lot for the moderator, for the panelists, for this great session, and see you in 1.5 hours.